So I'd like to spend a few moments talking to you about the accounting and tax aspects to consider when you're preparing for selling your business. This should help to maximise the value that you get out of the business and also help the whole process to go as smoothly as possible, which should help the speed at which the transaction completes and minimise the costs for all parties. Adjusted profits. So when a buyer is valuing a business, they won't just take the profit figure directly from your accounts, because there could be all sorts of reasons why that won't reflect the profits that would be achievable when they own the business. It could be, for example, that you have very high salaries for yourselves as directors of the business, or indeed you could have very low salaries. It's very common, as you'll appreciate, to have a low salary and then take a dividend. Well, if the low salary doesn't reflect the salary they're going to have to pay you going forward if you stay with the business or pay a replacement director, that needs to be adjusted for. It's also fairly common in owner-managed businesses to not have a rent payment unless you're renting from a third-party landlord. But if you own the premises, you might not charge a rent to your own business, so that might need to be adjusted for. And similarly, what we call lifestyle expenses. So it's perfectly acceptable to fund expensive vehicles through the business, to have lots of corporate entertaining. Now, these might be areas that would get cut back in a scenario where a buyer has purchased the business. So the profits would get adjusted to what we call a normalised maintainable earnings level. And that will be an indicator of the price. So a good area of preparation is to look at your profits and understand what figures would be adjusted, so you know what the profit figure is that the price will be based upon. It could also be worth, in the couple of years leading up to the transaction or the intended sale, before you go to market, to adjust your accounts. So actually maybe start paying a normal level of rent, or bring your salaries to a normalised level, because then it's one less thing that the buyer has to question or look into or adjust from your profit figure. And if they can rely upon the accounts as they're finalised and presented at Companies House, it gives them a slightly more, potentially slightly greater level of comfort when they're arriving at the price.